Ben Hunt, the S&P is up around 2% this year after being up 30% last year. But you see three big risks to the market. The first one is Chinese monetary policy changing. Why could this be so cataclysmic?
Sure. Look, the problem with China is always a problem of growth. That's what their government has to have to survive. What do you do when growth is suffering, as it clearly is in China? You've got to continue to work on your exports. How do you do that? You cut your money value. That's what they're doing, and that's a big deal. Now, whether it's cataclysmic or not, I don't know. The truth is, we don't have a crystal ball. Maybe they'll weather it, maybe they won't. But if they don't, it's going to be a big deal. And so we at Salient really try to develop our strategies in a way that doesn't require us to have a prediction about what happens in the world, but where we can be adaptive to whatever happens in the world.
Well, the second big risk is adapting to a world where the Fed is tightening. So what do you do when you're not fighting the Fed?
Here's the problem with the Fed and the way the market works. The market needs a story to go up, right? So the story for the past 5 years has been the Fed has got your back. And that's the story that's starting to weaken. And so what we are looking at is a world where, what's the story going to be? And again, I don't know. Maybe there'll be another story to replace it, another narrative to drive the market higher, or maybe there won't. If you look at history, when that market narrative changes to the Fed is tightening, that's a worrying sign for the market.
And then your third big risk to the market, Michael Lewis brought it up. He was worried about high-frequency traders and computers ruling and ruining the market. You worried about a flash crash, right?
I sure am, and I'll tell you why. It's what I describe as a hollow market, and what I mean by that is that about 70% of the trading, the trading that generates the little green and red arrows on CNBC every day that everybody pays so much attention to, is just machines talking to other machines. Now, some of that is the liquidity provision or high-frequency trading that Lewis is talking about. Other might be algorithmic trading, but it's on an arbitrage basis. But whatever it is, it's not fundamental buying and selling of stocks. So if you have a witch hunt, if you have a really change in the structure of the market, you could see that 70% go down, and that could create exactly that same sort of flash crash.
Those are some big risks. Thanks a lot, Ben Hunt.
My pleasure.
Thank you for watching The Street.